Business commentator Bernard Hickey from interest.co.nz. I asked him what will be the initial effects of our strong dollar.
The record high was just over 82 cents in 2008, and late this afternoon we got to just under that 82 cent mark. So the New Zealand dollar almost at its record highs. Stunning, really, just a couple of months after the worst earthquake in our history, and when the economy is relatively quiet.
We got near that high and then Moody's rather rained on the parade. Tell us about what happened with the banks, what's that going to mean as far as the dollar and more generally speaking?
Well, this afternoon, just before 5 o'clock, Moody's came out and downgraded the big four banks in New Zealand by one notch, partly because of the slow New Zealand economy and because of the exposure the banks have to international wholesale markets. This wasn't completely unexpected. Their parents in Australia had been downgraded a week earlier, but it did take the top off the currency. It dropped back a few basis points this afternoon. We'll see what happens tonight when the big European and US investors get their hands on the New Zealand dollar, but it's certainly up near its record highs, and also against the trade-weighted index, the New Zealand dollar is up near three-year highs at over 70.
When this happens with the Moody's or with the Standard & Poor's with our banks, we're not going through the floor, it's a little nudge. Does it really have a lot of effect with how we're looked at by foreign money, foreign investors?
Not a huge effect. It's just a shot across the bows, really, to say there's a few issues here, but we're not in the category of saying these banks are junk or they're any sort of, Greek banks or Icelandic banks. They're strong banks backed by their Australian parents and still at very high credit ratings compared to banks all around the world.
OK, we'll just go back to the dollar briefly. Petrol prices have been coming down. Oil's going back up. This should insulate us for a wee while, shouldn't it?
Well, this is great news for consumers. A stronger New Zealand dollar means that imports are cheaper, so you can turn up at your electronics store and get cheaper iPads and computers and phones, and it does help keep a lid on the petrol price, and we've seen it drop off in the last couple of weeks. So this is great news for consumers. It's really bad news for exporters, not just those who are trying to benefit from the higher commodity prices, but those who are exporting manufactured goods and to anywhere but Australia. And even those exporting to Australia have seen the New Zealand dollar strengthen against the Australian dollar in the last couple of weeks.
There is a bit of difference, and you touched on this before. It's not just a very poorly performing American dollar. Ours doing OK by itself.
Yes, well, our interest rates are higher than in the rest of the world. Remember, our official cash rate is 2.5%. It's 0% in America, and it's just over 1% in Europe, 0% in Japan. And the only thing we've got going for us, really, is that interest rates are even higher in Australia, and their economy is doing better than us. So for the last couple of months, one of the things that's protected us, or protected the export sector, is that the Australian dollar has been stronger than the New Zealand dollar, and therefore the New Zealand dollar versus the Australian dollar has been weak. It's our major trading partner. But in the last couple of weeks, the New Zealand dollar has started strengthening against the Australian dollar, and that's what's hurting us on the trade-weighted index. And it'll be interesting to see if the Reserve Bank in a couple of weeks' time comments on the strong New Zealand dollar on a trade-weighted index.
So could we see interest rates getting a bit more of a wind next time the Reserve Bank has its say?
Well, that'll be very interesting to see what the Reserve Bank says on June the 9th, when it gives us the interest rate outlook. Until now, most economists have been saying, well, we can wait until the end of this year, maybe early next year, before we increase the official cash rate. But we saw some quite strong inflationary expectations numbers this week, and some people are revisiting that idea of late 2012 increase in the official cash rate. Could be a little bit sooner, and that also pushes up our currency.
Given what you've said, and given where the Australian is against the American dollar, $1.05 American it's buying at the moment, it'd be a fool to not think the Kiwi dollar could go, what, even mid-80s against the American?
Well, certainly it's up near that 82 cents mark, and some people believe that the New Zealand dollar has further to go, that the US dollar is going to weaken further against many currencies because the US economy just can't seem to dig itself out of the hole. And just today, we've seen more figures showing a weak US consumer sector, and talk again that the US Federal Reserve will have to start printing again, which again devalues the US dollar.
Could we ever see the day we've got parity with them? Do you think that would ever happen?
Well, no one would have thought the Australian dollar would be at parity with the US dollar, but they've gotten there in a hurry in the last couple of months. So depends on what happens to the US dollar. If the US Federal Reserve has to print an awful lot more money, then parity is in prospect.
OK. aside from all that, $6 billion, China, where has this come from? What could this mean? It's got to be great news, doesn't it?
Well, it depends on which side of the ledger you're on. The Chinese, like any banker with plenty of money to lend, wants to lend us the money. It's a bit like someone who's doing a renovation, turns up to the bank and the bank manager says, hey, we can give you twice as much as you want, you can put on another bedroom. That's fine, another bedroom's good, but you have to pay the money back eventually, and that's the issue for New Zealand. Sure, they want us now, they want to lend us the money now, but we'll have to pay that back, and that means more interest payments out to the Chinese and others.
But in absolute layman's terms, it's got to look good. A country like China goes, they're worth putting $6 billion in. It's got to make us look good. Yeah, we've got to pay it back. You don't want to go crazy with it and, you know, buy a whole bunch of hats, but it's got to make us look good in the international sense that they want to invest here.
Yes, and Bill English said today that New Zealand is a story that the Chinese like, in part because we're not Americans. We're not printing money. We're not buying too much stuff that we're seen as irresponsible. And the Chinese are also very keen to diversify away from the US dollar. So New Zealand, Australia, Latin America, Africa, they're keen to use those huge foreign reserve stockpiles and put them somewhere they think is safe. The issue for New Zealand is, though, the more we borrow, the more we sell. And it's not just state assets, there's also a lot of dairy farms up for sale at the moment. The more we sell and borrow, the more we have to pay back in dividends and interest payments. And if you look at our history over the last decade, we have been increasingly selling off assets and borrowing more. And the foreign drain, if you like, the interest payments and the dividends on foreign-owned assets has increased to something like 8% of GDP. So that means we've actually gotten poorer over the last 8 years because we've sold off so much and borrowed so much.
So in short, a nice vote of confidence, but we've got to be cautious.
Yeah, it's like any bank manager wanting to throw money at you. It's nice, but you know that if you borrow the money, you'll have to pay it back at some stage. And that's what New Zealanders, I think, should be thinking about. Do we really want to borrow more money and sell more assets? Because that means we have to pay out in years to come.
From interest.co.nz, that was business commentator Bernard Hickey.